Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 24,000 psychological level. Since then, we did saw the Dow Jones has experienced the breakout, the pullback just towards the EMA 60 level, forming the hammer candle on top of the 25,000 psychological level as well. And the continuation pattern was being established as the Dow has once again rose above the 26,000 psychological level. So moving forward, we expect further upside on the Dow Jones index. For now, given that Dow has made some about 1,000 points of gain from the 25,000 psychological level, any pullback for now will be a healthy pullback for investors to digest their recent gains towards the 25,750 or even towards the 25,000 psychological level. 25,500 points a level before the next upbound will to resume on the Dow Jones towards the 26,500 or even towards the previous all-time high, which is around the 26,600 points a level. So all in all, the Dow Jones has been forming the higher, continues to form the higher high and also the higher low formation, implying that the uptrend is still very much intact on the Dow Jones index. The gains over the past couple of days was mainly due to the both the US and Mexico has agreed for a trade deal, while yesterday's minor gains about 0.1% on the Dow Jones index was mainly underpinned by the strong consumer confidence data in July 2018 that is the highest level since October 2000. Similarly, on the S&P 500, the S&P 500 has again rallied from the EMA 120, which is around the 2700 psychological level. It rallied, it traded on a sideways manner just towards the 2800 psychological level, and subsequently it formed the consolidation breakout above the 2875. Which is also the all-time high level, with the S&P 500 just marginally below the 2900 psychological level. We might see a further upside on the S&P 500 should the 2900 level were to be breached over the near-term period. Should the 2900 level were to be breached, further upside will be seen towards a new high towards this next resistance along the 2925 or even towards the 2950 level. In the meantime, the 2850 will serve as the immediate support level on the S&P 500. Some of this on the crude prices. The crude prices has endured a volatile trading session after forming a dodgy candle on top of the 75 US dollars barrel mark. Since then, the crude prices traded lower. It sank below the EMA 120 level towards the 63 US dollars barrel level mark, forming the double bottom formation. After hitting the 64 or 63 US dollars barrel level, we did see a good recovery pattern on the crude prices, as the crude prices has experienced the short-term trend line breakout above the 67. For now, we'll be monitoring closely above the 70 US dollars barrel level. That will be the key reasons for now. Earlier, it attempts to recover towards the 70, but we rejected the 70 and subsequently pull back. So for now, we will be monitoring for the next recovery for the crude prices to trend towards the 70 until we can see a breakout above the 70 and a closing above that. Only we can confirm for further upside on crude prices back towards the 75. In the meantime, the immediate support will be located towards the 64 US dollars barrel mark. Okay, some updates on our local front. The FMKLCI continues to march higher after the recent pullback just towards the EMA 120. Subsequently, the FMKLCI continues to trend higher. It has reclaimed above. It has reclaimed the 1800 psychological level, and the follow-through buying interest was noted beyond that, as the key index continues to trend higher towards this, just closing marginally below the next resistance around the 1830. For now, we need to monitor for the next breakout above this 1830. Should there be a breach above that, then we can confirm for the next rally ready to resume towards the 1860 level on the FMKLCI. In the meantime, a fall below or pullback below the 1800 will see the key index retracing back towards the 1760 level. Given that there's no bearish divergence signal at current juncture, there's a high coupled with the return of foreign funds into the Malaysian equities, we could expect further upside on the key index to be as selected index heavyweights will be very well supported for the index to push higher towards the 1830 level. On the lower liners wise, is on a different story. Despite the FMKLCI continues to march higher, the FM small cap index has again hit some of the resistance along the 15,200 points level. Subsequently, the small cap index has reversed its position of trending lower towards the EMA 60 level. For now, we need to monitor to see how the 14,560 points level holds. If the 14,560 level can hold, then we might see further pullback on the lower liners. But in the event that the we could see some of the hammer candle on the bullish engulfing candle was being formed over the next couple of days on the FM stock index, then that could signal a recovery towards the back towards the 15,200 points. However, indicators are still showing some of the negativity, as the MACD indicator has already issued a sell signal earlier on last week, whereas the RSI has tripped below the 50 level for the past 2 trading days. On stocks wise, some of the stocks that we can watch out for firstly would be Unisem. Unisem has been on a very strong recovery phase following the hammer candle established on top of the $1.60. Subsequently, Unisem continues to trend higher, forming the higher high and also the higher low formation over the past couple of months. And recently, after hitting the recent peak of around the $3.05 level, we are seeing a healthy pullback on Unisem just towards the EMA 20 level, forming some of the hammer candle along that. And on yesterday, we did see Unisem has made a good recovery pattern, forming the short-term breakout from the EMA 60, a pullback, and the continuation pattern for Unisem. Firstly, to retest the $3.05. That will be the immediate resistance for now. Should there be a breach above that, further upside will be seen for your Unisem towards its next resistance along the $3.32 level. Your stop loss point on Unisem will be located towards the recent low, which is around the $2.75. Everything appears to be still quite positive on Unisem right now on the indicators, as you can see that the MACD histogram has turned green yesterday, just that the RSI is slightly on the overbought position right now. So you have to use the EMA 9 or the EMA 20 as a trading stop loss for now. On our KPJ, similarly, price has been on a very strong recovery from the low of around the 84 cents level, forming the hammer candle. Subsequently, KPJ trended towards the recent peak of around the $1.15. Yes, attempt to breach above the $1.15 level recently, but it did not close above that, and subsequently it pulled back just towards the EMA 20 level. And on yesterday, we did see a healthy recovery pattern on KPJ, forming the short-term breakout, pullback, and the continuation pattern for KPJ. Firstly, to trend towards the first resistance located towards the $1.20, or even towards the $1.28 level. Your stop loss point will be located towards the $1.09. Should there be a breakout above the $1.15 level on KPJ. Everything appears to be quite positive on KBJ right now, as you can see that uptrend rotation formation was really recently established in the mid of June. The EMA 9, 20, 60, and 120 has been in line since then. The MACD histogram has turned green yesterday, whereas the RSI has recovered from the 50 level on yesterday as well. On the FMKLCI stocks wise, some of the stocks that laggards that we can watch out for will be firstly is CIMB. A lot of FMKLCI link companies has been a very strong recovery phase. That's the main reason for the rally in the FMKLCI. So CIMB could be one of the laggards, as after recovering from the $5.20 level, CIMB has been trading on a sideways manner between the 5.75 towards the 6 ringgit psychological level. And on yesterday itself, we are seeing a good breakout above the 6 ringgit psychological level, as CIMB closed above the EMA 60 level as well. Following the breakout above the 6 ringgit psychological level, we could expect further upside on CIMB to trend towards the 6.42 or even towards the 6.57 level. The stop loss point will be located towards the 5.75 on CIMB. Last two company for today will be firstly is PPHP. PPHP is still in a downtrend formation, so any recovery from now will be just taken as a technical rebound play. PPHP has again rejected the EMA 120 levels on several occasions, once in the end of February, second time early May, third time on the early of July, and in the mid of August, we are seeing some of the rejection along the EMA 120 level as well. With four times of rejection along the EMA 120, PPHP has once again retested the EMA 120 on yesterday itself, but it did not close above the EMA 120. So for now, for PPHP, we'll be monitoring for the breakout above the 64.5 cents level. Until we can see a breakout and a closing above that, only we can confirm for PPHP to trend towards the 69 cents or even towards the 76 cents level. The stop loss point will be pegged below the 56.5 cents level on PPHP. For now, any recovery will be just taken as a technical rebound play until we can see a breakout, the pullback, and the continuation pattern. Only we can confirm for the recovery on our PPHP towards the 76 cents level. Last company for today will be a Comfort Glove. Comfort Gloves have again staged a very strong, sharp recovery from the 68.5 cents level. Since then, we did see Comfort Glove has experienced the breakout above the 91.5 cents. Following the breakout above the 91.5 cents, Comfort Glove has been trading in a sideways manner. But recently, we are seeing a good flat formation breakout on Comfort Glove above the EMA 20 level, accompanied by some of the improvement in volumes yesterday. Following the flat formation breakout above the 1 ringgit and 1 cents level on Comfort Glove, we are expecting price to trend towards the 113 or even towards the 1 ringgit and 22 cents level. Your stop loss point will be located towards the 94.5 cents level on Comfort Glove. A lot of glove companies has been a very strong rally phase as well, like Hata Laga and Top Glove has been making a new highs. So the lower liners like Comfort Glove could be the laggards on the recovery play. And following the flat formation breakout on yesterday, the uptrend in depth orientation formation was also recently established. The MA 9, 20, 60, and 120 has been in line, whereas the MACD histogram has really turned green. The RSI has recovered from the 50 level as well. If you have any questions, you can put in the chat box and I'll reply you shortly. Reach has done a gap up and hit the first target price along the 33 cents level. Following some of the climatic volumes being traded on Reach, any pullback for now will be a healthy pullback. Well, should there be a gap up at least for today, then there will be a chance for you to lock in some of your profit, because it might pull back on intraday basis before the next uptrend to resume towards the 35 cents or even towards the 38 cents level. Your stop loss point for now will be located towards the 29 cents level on Reach. So for now, any pullback will be a healthy pullback. And should there be like a pullback accompanied by some of the declining in volumes or lower volumes during the pullback phase, then there will be a chance for you to accumulate on Reach towards the 35 cents or even towards the 38 cents. Energy has been a sharp pullback phase following the valuation below the 53.5 cents level after the company has announced for the rights issue in order to repay its debt, the company's debt. Following the valuation below the 53.5 cents level, price continues to tank below the support level, which is next support level, which is located towards the 39.5 cents. Following the breach below the 39.5 cents level, we might see further pullback on Sapura Energy towards the 30 cents. That will be the next support level on Sapura Energy. For now, given that most of volumes has been already sold off over the past couple of days, any recovery from now will be taken as a selling the strength strategy. If you did not manage to cut loss, then any recovery from now towards the 39.5 cents will be an opportunity for you to sell into strength. If there's no further question for today, then we'll end the morning briefing. Thank you.